Mr. Commissioner, we have a bit of some issues in this, and you talked about the influence of the foreign investors. Some folks are beginning to think that maybe at the end of this exercise, we'll have more foreign folks in the insurance business in Nigeria than local players. Is that a concern anyone should be worried about?
No, I don't think we should be concerned. There is no where a control in entry of foreign investment has hurt an economy. I mean, it is going to be controlled. When we suspended licensing companies from 2007 to date, only one company was licensed. And foreign players, we have the biggest international players already operating in Nigeria in partnership with the existing local players. So we don't believe, the regulation of the sector is properly controlled by the rules and guidelines available. And no foreign operator or local operator can play out of those brackets. So we believe we have the wherewithal to regulate any operator coming in. But the importance of encouraging foreign investment to come in is not only for the funds they'll bring in. They'll bring expertise, they'll bring capacity, most importantly, which is lacking in the industry now. And they will bring some good corporate practice, which others will have to imbibe and copy, and which will help the regulator also to develop the sector further.
Mr. Commissioner, as you speak here live on channels to our audience, some of them are also on Twitter, on social media, they're asking a few questions. One of them was to please ask you, Mr. Commissioner, sir, what is wrong with Nigel Insurance, because this particular individual who is our viewer, who is a retired or top officer of the Nigerian Navy, says the insurance company, Nigel Insurance, is owing him about 2 million naira, which is part of his contributory life insurance policy due for payment since the end of December last year. Is Nigel Insurance in any solvency or liquidity or recapital or regulatory capital issue?
Will you tell me whether the Twitter has reported a complaint to us? Because it's only when I have a complaint on my table that I'll be able to investigate. I will not be able to address a question for which I have no facts. You can send a complaint to the Office of the Commissioner for Insurance, and we'll attend to him. We'll give him a personal attention and ensure, because we have a department dedicated for considering complaints from the consumers. We call it Complaints Bureau. And when it comes, the dedicated staff will ensure that he gets his benefits where he's entitled to.
Is there any insurance company that is in distress as we speak?
Distress is a word that I don't know the full definition of. If you mean, is there any insurance companies that is having an extra regulatory oversight, I would say yes, for different reasons. If distress means delay in payment of claims, for example, it may not be because the company is not financially capable. It may be because the management has other views of managing the responsibility they have. It may be for reasons other than what is obvious. The difference between a distress in one sector and another, it can be a very large difference. But as far as our industry is concerned, like every sector of this economy, we have companies that are challenged. Challenged in their operations, not only financially, but even on corporate governance-wise. And that is the purpose of the regulator. The regulator is supposed to ensure that operators operate within the rules and meet the expectation for which they are licensed to. And that is why from time to time, every regulator would ensure that he releases rules and guidelines that will enable operators meet the expectation of their consumers. And in our industry, like all other industry, we have some challenged companies, but we believe we are up to the task. We have had, over the years, companies that have lost their license, like the other sectors. That is all the purpose of regulation. Companies that cannot conform with the objectives of their licensing are usually checked by the regulator, and that's what we do on a daily basis.
But do you think, sir, that you're having more insurance companies that are technically stressed? For example, one or two others are still under management, Gold Link Insurance, Unique Insurance PLC. What's the state of these insurers that are under your management, as it were?
We have different levels of intervention as regulators. And depending on the level of rot or problem we find in the company, that dictates how our intervention is. Our intervention goes as simple as, okay, we've seen your accounts. Can you tell us how you can improve on this? And with the guidelines we have received on this tier-based minimum solvency capital, when it is published, you will see a detailed sections where it explains intervention levels, various intervention levels. And there are interventions we have where we directly get involved, where we partake and get involved in board decisions and board meetings to see how decisions are taken and how they're implemented. And there's another level where we physically replaces management or the board or both. And when we do that, it means the company has gone into a critical state. And when we do that, we appoint an interim management board, usually of independent directors who have no stake in the company, and we work with them to see how we can turn the company around. At the moment, we have a few companies in the industry who are under various levels of regulatory intervention. And we have not decided on which is terminal or which is not. And we have companies also in the market where we have already given them notice to cancel their policy, which is all intervention approaches have failed. And we believe it would be detrimental to the interests of policyholders and other stakeholders to allow them to continue to be in operation. So we have already given them notice to cancel their policies. And when we take that extreme level of intervention, we usually appoint a receiver who would take on to make sure that no stakeholder loses as much as possible. And where there is loss, the loss is shared according to everybody's exposure.
Mr. Commissioner, let's move this forward. So what happens the morning after this reclassification and recapitalization as the same is doing? What happens the morning after the risk assessment? What if some insurance companies are unable to operate within the required regulatory capital? What happens to the policyholders? What happens to their portfolio? How will you deal with this moving forward?
By the advice we have extended out, no insurance company is going to lose its license. That is the morning after. But let me talk about the afternoon and the evening before the morning after. Companies have been advised now of their categories. And the categorization, as you remember, is tier 1, 2, and 3. If a company finds itself in tier 3, it means that by 1st January, they can only be directly involved in business of tier 3. If it finds itself in tier 2, likewise. If it finds itself in tier 1, it means it can get involved in all businesses of tier 2 and 3 and 1. And those categorizations are defined properly in the framework we exposed, on which we're also going to expose in the policy next week. Now, no company would be deprived from doing business in all classes as far as it does not get involved directly by leading on the business or sharing directly on co-insurance basis. These are technical terms. Leading is where you become the company that the client deals with and you are leading other operators. In most cases, every operator is individually responsible for the share of his business he takes. The second one is, if you find yourself in a tier that is, or if you're doing businesses in a tier higher than your current status, we have allowed you the period of what we call the run-off period. Non-life policies are usually annual policies. They are renewed every 12 months. So you have 12 months to continue managing these accounts until they run off, until they exhaust. But if you decide, for example, you are a company that has 2 licenses, you want to separate them. When you separate those licenses, you are free to choose to operate in tier 1 in life and in tier 2 or 3 in general business, in non-life. It's up to you. That is the decisions that your board have to take. So if you find yourself in tier 3, which means you cannot do tier 2 business or tier 1 directly, you can still subscribe to reinsurance pools, which is actually a non-committal, non-expensive operation of all insurance operators. By subscribing to a reinsurance pool, somebody in the higher tier or an independent reinsurer, independent manager manages the pool, and you just share on the profit and the loss of the pool. So companies have been provided with so many avenues to continue to be in business. But what concerns us as regulators is we have found the tendency by some operators to want to operate in tier 1 and lead on businesses where their financial ability is wanting. And it is not going to be fair on the policyholder or any other stakeholder to allow such to happen, because when there are claims, such companies cannot meet up with the claims. And the unnecessary competition for leadership and participation was what caused the erosion of appropriate premium charge, appropriate rates. insurance companies have been competing mostly on rates and not on anything else. And the rates competition has been exacerbated by those companies who think that they must belong to what they should not belong to. And if now they operate within their category, they will have no much competition, they will have no need to cut rates.
Commissioner for Insurance, Mohammed Kari, thank you very much for this conversation. And of course, finally, the retired naval officer says we should say thank you to you, that he will write a letter to you, NAICOM, as directed by you here on the program. Thank you very much for speaking with us, this exclusive interview on the state of the insurance industry.